Hello, my dear friends. I made, I think, a mistake a couple days back with the Trololo chart. And I discovered it while trying to, because I mentioned, like, I think there was about 55% chance that we would test the bottom, but I became more bullish and I thought it was actually lower than 50% chance. I thought it was likely price would go up from here because of this kind of trend line that I had drawn, a bull bear cycle, and that I thought we were in 2011 scenario, and so we couldn't go to new highs in undervaluation, and so I thought we would go this way, and we would have to stay above the green line here. But when I tried to put that into actual scenarios, the big problem that I encountered was that first of all, I discovered that this is not 3 trillion, but 2 trillion, the next top. And this is like a, a measurement mistake that I made. I don't know how it happened, but I didn't do it well, because if I do it correctly, I just measure where the trend line is in 2023 at the start or at the end of 2022. This red line, if you measure that, well, actually, that's like, this is 120 long and that's 40. So that means that's exactly at 33% height is where the trend line is. And in 33% height, that means that is, in a logarithmic chart, 33% means it's actually 2 trillion, not 3 trillion. You have to be at 50% to be at 3 trillion. At half of the chart. So if the trend line would be here, yes, that means it's 3 trillion. But if the trend line is here at 1/3, it's exactly 1/3, then actually it's 2 trillion. So that was the first discovery, like, oh my God, it's only 2 trillion the next stop. So I plugged in those numbers, 2 trillion. And then also I made a mistake about market shares. I said that at the next top, Bitcoin Core will likely peak out at 16% market share. That's correct. I mean, that will be the bottom, yes. But typically at the top of the market, I'm sorry, they all peak out at different moments. Typically, Bitcoin Core will peak out the same. And if you look back here, how much market share Bitcoin Core had when it went to 20K in the previous cycle. Actually, at that point, it still had 54% market share. It's only after the month after, when the other coins also pumped to their all-time highs, that Bitcoin Core dropped from 54% market share to a new low of 33% market share. But it was not at the same time when it reached its height, its top valuation. Let me show that also on this the dominance chart of Bitcoin Core and all the other coins. So at the bubble in end of 2017, you see here, actually here was the peak valuation of Bitcoin Core, or a little bit later here. It was about here on 18 December here. You have 54% market share. That was when it hit 20K. But then the month after, from 18 December till 8 January, at 8 January, it found its bottom of only 33% market share. But then it was maybe around maybe 17K or so. But it's due to the other coins pumping. You see, Ethereum, for example, is a 13% market share here. Whereas when Bitcoin Core peaks here, Ethereum is only 11% market share. But it's the month after that, the weeks after Ethereum pumps, for example, and it goes from 11% market share to, here you see the height. Ethereum went to 20% market share at its peak valuation. So when we reach the next top, that will not be like Bitcoin Core will likely peak out not at 50% as in the previous cycle, but when it reaches its top valuation, it will likely have about 33% market share. That's also how I get to this number of 30K or 35K. I estimate how high will the market share be of Bitcoin Core in the next cycle when it reaches its top valuation. And so I changed these numbers here. Actually, I have to look at when it reaches its top valuation, what market share does it have? And for example, in 2011, the top valuation was $32. Then it had 19.8% market share. 2013, the top valuation 150. At that moment, it had 87% market share. And if you remember the numbers before, I had only like 83% market share, but it was wrong. Huh? And when it reached its top valuation in 2017, it had 54% market share. So it's these numbers that I look at. Okay, how much loss in market share does it have every time? Huh? And I extrapolate it. And so, for example, it's more and more. This is also interesting. People think that Bitcoin Core is actually strengthening its position in the market. This is really not the pattern that we're seeing. The market share, yes, it just went up from here, a low of 33% to today about 70% peaked out. People think, oh, Bitcoin Core is doing very well. And actually, in the next cycle, it might actually like dominate more than the previous cycle, but this is not the pattern. Even though it won a lot of market share back here, this is still a lot lower, 70% market share than in the previous cycles, where you had like this was an absolute minimum 70% market share. Actually, it never reached it. So it's so you see that in every cycle it really loses a lot of market share, and typically at the beginning of a bull market it will gain market share. During the bear market, as well as the early bull market, because this is the bear market from January 18 to January 19, that's a totally full-on bear market here in crypto. It gained back market share from about 33 to about 55% market share. And then you have the early bull market. It also typically gains market share. Let us check in the previous cycle. Previous cycle, the bear market was from 13, the peak was here that's the peak of the previous bull market. At the end of 2013, early 2014, we have a bear market. Bitcoin should be gaining market share. It's 90% market share here. The bear market is still January 2015, and what is the market share then? It's 80% market. It went down from 90 till 80. So that's strange. What happened here? Well, you see, for example, it actually did gain market share in the early bear market, the first half year. It went up to a peak of 95% market share, from 90 to 95% market share. The first half year of the bear market. The second half year of the bear market, it lost a lot of market share. And why? Because certain coins, and in this case, Ripple totally exploded to the upside while the bear market was ongoing. That's why I start to mention a Ripple from time to time, because I think it's very likely you will see pump in Ripple as well as Ethereum and Bitcoin Cash and bigger coins, because it even happened in the previous bear market. But I don't think we're in a bear market here. We're in the early bull market. But let's look at the early bull market, for example. The early bull market of previous cycle started in January and was actually the whole year of 2015. So that's this whole year. What did Bitcoin market share do? It went up from almost 80% to 90%, you see? So the early bull market Bitcoin Core also gains market share. This is also what we've seen again. But that's the end of the ride, the early bull market. Because in 2016, we had the second phase of the bull market where other coins pump. In this case, you see, for example, Ethereum in 2016 went up from a market share of 1% to 13%, because they start pumping. And the same is true for many other coins. Look at, for example, what you have here, Litecoin, Monero. Let's take a look. January, not even 0.1% for Monero, and it starts to gain. It goes up to even 1%. So 10 times more market share for Monero in the second phase of the bull market. Same for almost all other coins. Litecoin, let's take a look. Second phase of the bull market starts at 2% market share, and by the end of 2016, we are at, where is Litecoin? 1.3. It didn't win. It's only later. In the third phase of the bull market, Litecoin wins market share. But this is important. Why? Because we have to estimate the top and what the market share will be of Bitcoin Core, and we can clearly see that it's always losing market share in cycles, in patterns. And so how much market share did it lose? Well, the first cycle it lost 11% market share, and the second cycle in 2017 it lost 38% market share, a lot more than in the previous cycle. This is very important, because if you want to estimate probabilities and try to estimate as accurate as possible where we will what we will see in the future, the best method is to extrapolate previous patterns unless fundamentals have changed. But fundamentals have not changed, and so for Bitcoin Core, for example, has lost a lot of market share, and so if you how much more? Well, double as much. So every cycle it loses double as much market share. So what did I do here then? Okay, let's be conservative because I might be biased. I really don't like Bitcoin Core. I don't like what's happening there. And so I might be biased. So I'm estimating modestly what will be the market share for the next cycle. Are we going to double it up again and bring it to 70%? Because that's the pattern, that it doubles in loss of market share every cycle. So if we want to extrapolate this, we would say, okay, it's next cycle it will be 70% market share loss. That means this 54% needs to be cut by 70%. I don't do this. I actually take the same market share loss as previous cycle of 38%, and then I get to about 33% market share when it reaches its peak valuation. So I know that this number is likely correct, that the next stop is, there's an accurate prediction, it will be 2 trillion. Why? As mentioned in several videos before, because the moment you look at the logarithmic regression from the previous cycle and you extend it, then you don't see average prices for the future, but what you see is top valuations for the future. At the end of the cycle, when the bear market is finished, you take all price data, you draw the logarithmic regression with the data till here, and where this points to is not average prices for the future, but top prices for the next cycle. So this has been always the pattern in the past, and actually it wasn't even a top valuation because never in previous cycles did it reach actually the red line. It always stays below even when it peaked out. But okay, let's be positive here because we've my estimations are already very bearish for most people. So I try to not have the bearish bias here and be optimistic and draw the line till it hits the red line, and then still you're only at 2 trillion. You can stay below it also, and then you're only at 1.5 trillion, which has actually been the pattern in the past. But let's take 2 trillion, and also let's make it a little bit later, because the later you have the peak, the higher it will be. And of course, so this is what I did. First, what does that mean? It also means that very likely we know that at the next peak we will have an overvaluation above the trend line. So what will happen is the trend line will be pulled downwards because of new prices coming in that are below the trend line. The trend line will bend downwards, and then at the end of the cycle, the prices will go above this trend line, and we will have an overvaluation again, like we saw in all previous bull markets. But the question is, how much overvaluation will we see in next cycle? If you extrapolate these numbers, you could say, by a rough estimate, 1,000%, 900%, 700% overvaluation, it'll probably be about 500% overvaluation. This is also what I said in the past, but upon going a bit deeper in that, actually accurate, the way you should do that is actually look at the loss every year of how much loss it is every year in overvaluation compared to the previous cycle. And then you see that, okay, the second cycle in 2013, it went to 950% overvaluation. There's a 10% loss of volatility, you could say, in the next cycle. The cycle after in 2017, you have 730% overvaluation. It's a loss of actually not 10%, but 25% less higher. That means actually volatility is the reduction in volatility is accelerating. So if you extrapolate this, you can say actually it's more than doubling every year in loss of volatility. So if you do for the next cycle, doubling up again, you're at minus 50% compared to the previous one. So you have to cut this in half to take an estimate how much overvaluation will we get in the next cycle, and so that's about 360%. So this number I'm very likely to happen. This number also, and it's a modest estimation, and this number also, and what do you get then? Then you get the end result is this, and as well as this. So we get an estimation of the next stop will be only 36K for Bitcoin Core at the absolute peak valuation, but also we will likely have only an overvaluation compared to the trend line of about 350%. And what does that mean? That means that the trend line will have to be only 580 billion by that time. And right now, the trend line is at 2 trillion. So this trend line needs to go from here to here. This red line needs to be pulled down to here by that time. And that's where there was a big contradiction in my chart, because 580 billion, where are we today with the trend line? We're at 400 billion. And actually every day you update this is like a billion extra. The trend line is right now going up very fast. And at current speed, we will be way higher than 580 billion, the trend line in 3 years. So what needs to happen? This trend line really needs to like slow down in growth dramatically and quickly for us to only be at 580 billion, which is likely. By this time, in 3 years from today, the trend line really needs to start slowing down quickly, meaning the prices, the white line, cannot continue to go close to the red line. No, it needs to actually pull away from the red line to really have that effect of lowering the average prices and lowering the growth rate. Only then you can pull down the red line considerably. And that's why my previous of a couple of days back, where I said that actually prices will have to stay above the green line, because I think we're in 2011 scenario, and I don't think we'll see new highs in undervaluation. But if I follow those rules, prices cannot go much lower here, because it would break the green line, and we would very quickly see new highs in undervaluation. So that's why I came with this scenario. But when I put in the numbers on the sheet, I see that, but that's not possible, because that means prices wouldn't go down. Actually, we might have seen a new low, a higher low here, and actually fiat prices would actually not go down and actually not pull away from the red line that much. And so that would not fit with this number, that we can only be at 580 billion trend line valuation. It's not compatible with each other. So I've changed my mind. And now, instead of lowering the odds that we will test the bottom of 4K, I increased it from 55%. That was first my estimate, to 66%. And at the same time, of course, you have to also increase the odds to make a new bottom. That was only 25%. I increased it to 33%. This is still way below 50%. I still think it's not likely we make a new bottom, but I think it's actually more likely with this information that we will test the bottom, because we really need to go to lower prices. So I made a new chart that I think is more likely, and that's this one. Voila. I think this is more realistic than this one. So let's take a look at this one. What's the difference? I moved the line a little bit here. This was in end of 2023, 22 in October. I moved this to December 2023, 2 months later. It gives a little bit more room to grow a little bit higher. And of course, this is like not so important. I used these estimations to come to like October, but I mean, you could as well say that maybe this bear market was just a little bit too short the bear market of was very strange. The bear market of 2017 18, it went down too quickly. If you look at the percentages losses, it's actually higher here than it is here. And how is that possible? That we are a higher market share, like the market caps are a lot higher in this cycle, yet the volatility is higher than the previous cycle. How is that possible? That's so strange, huh? I don't understand that, why that happened. But this, by the way, was another like red flag that likely the bottom was in here because the percentage losses were so high, and even higher in previous cycle. It was very strange. But there were some other indicators, but that's why I still believe strongly this is the bottom, because this was a tremendous bear market considering the market caps we were in. And I had expected it should have taken longer and should have gone slower, about 1.5 years. But okay, that didn't happen. But I think reversion to the means also explained then this bump here. Like, yeah, okay, this market, bear market was too much. That's why you probably had also very high bounce from it, or you could say breakout. But if you combine these two, you still like these things average out into, well, just a bear market. That's not so strong as what we've seen here. If you combine these two, there's something else I need to say also about the estimation of the top that's important, and that is that the number here also is, there are other indicators to see that likely the top will only be 2 trillion, and that is that if you look at the previous returns of previous cycles and you extrapolate that, you get the same result. The returns of the previous cycles were a 1/5 of the cycle before. I don't have the numbers here, but I did the calculation. And so in the previous cycle, we had a 12,000% return. So if you extrapolate this and you cut it again in 5, you get a return from the bottom of 2,500%, and the bottom is 100 billion. 2,500% is 2.5 trillion. So it's the same range. If you just extrapolate previous returns, you also get about to this top valuation. And of course, my whole chart is based on this number, so it's a very important number. And so you want to have different independent calculations that lead to the same result. So let's take a look at the new bull bear cycle that I've drawn, and why I think it's more like there were a few indeed things that indeed were a bit weird about this cycle. It seems that there is no, like, yes, okay, this goes up from 800 billion to 3 trillion, I was saying, but that's actually 2 trillion. 800 billion to 2 trillion, that's a huge rally. But still, you can see that what we're missing here on the white line is it's not going parabolic. Typically, it goes actually horizontal at the end. Even at the previous cycle, that's like a lot. It goes also horizontal at the end. You could say not as horizontal as it always goes a little bit less horizontal, you see. But for the next cycle, this is too much of a loss in volatility. At the next cycle, we should see some kind of horizontal move also, or this cycle at the end of the bull market. So I think I corrected that by with this one that goes more horizontal at the last move. By putting it a little bit further, 2-3 months further, it goes a little bit higher also. That will be a little bit closer to, instead of 2.1 trillion. Well, that's where it's pointing. Maybe it goes a little bit higher there. But most importantly, the green line is broken here, and we do test the bottom. Here, the bottom is not tested. Here, the bottom is tested. Let's take this one. So this is 100 billion. This is a little bit higher. It's 125 billion. So I give this a 60%, 66% chance we will reach that. Of course, not in a straight line, but it has to happen quite soon, actually. for it to really have the strongest effect to pull down the trend line. So I think this is likely to happen. It means it's, instead of saying there is good news for crypto bulls in my previous video, it's actually the inverse. This is bad news for crypto bulls. It's bearish in the short term. But not so bearish as the bears think. Like many bears, and you will see them come more and more onto the market and speak louder and louder. As we would test the bottom of 4K, the whole market will predict, or 95% of the market will predict lower prices, and that we will likely now break the bottom of 3K or 100 billion, and so it will be extremely bearish. And from there, we can have a surprise recover rally, um, and um, and the most and the way it goes further here is that prices actually stay actually way below the red line, and so I do expect again actually a mixture of this now and this. Um, but do we make a new high in undervaluation? Let's take a look. Not, we don't, because but it's similar to the previous cycle. We go to minus 76%. Actually, that is a new high in undervaluation. So if we would do this, we do make again a new high in undervaluation. And people, several attentive people have said, but how can it be that you always make new highs in undervaluation compared to the trend line? That shouldn't be the case. If volatility goes down, you should go at the tops you have lower highs, but you also see like this go up, and so volatility should go down. But what I believe is the case, and certainly if you look at this 2 trillion valuation for the next cycle, is that actually crypto in general is really, there's something going wrong in crypto, because the growth rates are slowing down too quickly. And I think, yeah, I think it's because like this was really the perfect scenario in the beginning. It could grow basically unlimited because there was no limit on the growth rate. But with Bitcoin Core, there has been put a limit in on the growth rate, a cap on growth, a technical cap. It can't process more transactions, and if it does, the price goes up a lot. And so there is actually an artificial cap on the growth has been put there, and I think this. Wait, one moment. Yeah, the point I was trying to make with the cycles here is that, yeah, if you extrapolate it, you may end up being in October 2022. If you start counting from the bottom and you add 3.8 years, that would be the estimation of the top. But if indeed we have a scenario like this here, then we are going to test the bottom, and actually a lot later, like 1 year later, maybe 1.5 years later than the bottom, we test the bottom again. This in practice, the bull market starts here because that's the low. But when it comes to the feeling in the market, many will experience this still as a bear market. And so even though, and so the question is, from where do you start counting the next bull market? If you indeed start counting from the low here, you have to start counting here, and you have to add from there 3.8 years, and that would indeed lead to a top about here. But you could also start like counting from here, and even from here, the 3.8 years. And then, I'm sorry, I have my son here, so you might hear some noises from him. But in that case, I mean, the top, if you start counting from here, the top is here. But if you would start counting from here or from here, 4 years, the top may be like half a year later or even a year later, and not in the end of 2022, but it may be at the end of 2023. This is just all guesswork, but I think you have to be flexible here. The same here, someone was criticizing me like, hey, you say the top will only be 2 trillion. That's an extraordinary statement, and for extraordinary statements you need extraordinary evidence, because I remember very well you predicted the bear market to take 1 year and a half, but actually it was 1 year. And he was thereby suggesting that I was really wrong. But actually, predicting that the bear market will be 1 year and a half at the top of 2017 was a very, very good prediction. Even if it ended up being only 1 year, that was an extremely good prediction. If you were in the market then, you will remember that actually almost nobody predicted a bear market, let alone a bear market that would take over a year. So that was a quite accurate prediction. This is what I try to do today also, to have a prediction that is as accurate as possible. And for that, I just use reason and logic and extrapolating patterns from the past. That's how you need to do that. And that's rare to find, because you will see that most market predictors use wishful thinking, and the arguments they use are extremely weak, such as, for example, that the halvening will initiate the next bull market. There is no pattern in the past that was the case. And also, when you look at the fundamentals of the argument, that the supply is getting reduced a lot and thereby it will pump prices, this is incorrect, because it's only the supply for the miners that's get cut in half, but that is not even close to the total supply. The total supply of Bitcoin is totally dependent on investors, whether they dump bitcoins or buy bitcoins, pump it, like whether they want to buy bitcoins, and especially new investors entering the market, whether they also start buying or not. That will sorry, when it comes to supply, it's all based on existing investors, not on miners dumping their few coins compared to the total amount of coins available. So it all depends on the investors, the supply, not on the miners. And inversely, you cannot just look at supply, you also have to look at demand. And there too, it all depends on investors. So using halvening as an argument for where prices will likely be is extremely weak argument. There is no pattern in the past of a 4-year cycle based on halvenings. And fundamentally, it actually doesn't change much to the supply at all. So looking at this chart here, I put also the white lines, and what do I use as a guidance here? Well, just patterns from the past here. You see that the blue line is always being the white line goes around it, but especially at the end, you will see that the white line is below it and then goes straight up. Below it, goes up. At the end, below it and goes up. So that's what I do here. Below it and it goes up. Right before it, it's above it. And every cycle, above, and above. So you have a bump above it. And this is a very important point, because this is 1 year before the top. You always see the maximum in undervaluation. Here you see the maximum in undervaluation exactly 1 year before the top. The maximum undervaluation is here 1 year before the top. So this is the point where you see like this maximum undervaluation, this maximum undervaluation. It's not exactly the case here, but you can see that the trend is downwards. And so on average, the maximum undervaluation is around here, not around here. And not around here, but around here. So this is also what I draw on this chart. Likely the distance between the red line and the actual prices will be the highest only 1 year before the top. And until that time, crypto is actually doubtful. It's a doubtful market. And actually, until that time, you have great buying opportunities for crypto, because even though fiat prices may be higher from today, actually, since you're already years further, and since there have not been like dramas in the market, like for example setting new lows here below 3,000, okay, that's very bearish. But if that hasn't happened in the meantime, and the market has set higher highs, higher highs, higher lows, higher highs, higher lows, like for a market observer, this looks pretty good. But for the average observer, he's just looking at what? It's just 14K. That was like 2 years ago also, and 3-4 years ago we're at 20K. Like there's no widespread bullishness yet. And this is actually the point of also like yeah, a great point to enter crypto. And I expect like you had like 3 points, three great entry points here. Here you had like 4 or 5 great entry points. I expect since cycles continue that we'll have many more great entry points coming for us in this crypto early bull market. And the biggest one likely is yet to come. Of course, we missed the biggest one um, because we likely saw the bottom. But from a time perspective, what's the best time to buy? At 100 billion here, or 1 year and a half later at 120 billion? Actually, it's actually a better time to buy at 120 billion 1 year and a half, because a 20% return in 1 year and a half for experienced investors like us who take very high risk investments, where we also expect a very high reward. Actually, this is a better entry point. So I think that, and this actually continues to be the case, because as the market moves up, yes, fiat prices are higher, but you also have more validation in the market that things in crypto are not as bad. You will also see great fundamentals popping up for certain coins that do see, for example, real traction, like utility, like amount of transactions, amount of value sent over the chain should start to go up a lot here, even though prices don't go up a lot. And this will also influence, for example, RVT ratios. If I have made a video about it, we really want to see these kind of indicators also pick up, and NVT ratios. So what else do we have on the chart? Yeah, that's the most important thing, and that prices actually don't go, that you don't have major pumps anymore, because that's bad for the logarithmic trend line. Like the higher prices go, the higher the logarithmic trend line stays, but that's not really possible. The trend line really needs to be pulled down. That's why these prices are staying quite low and quite close to the bull bear cycle line, the blue line that I drawn here. That's why I see only a weak pump. From testing the bottom, I don't see a strong pump. I see a weak pump that doesn't even breach the 14K or the 330 billion or 350 billion that we saw here. If we go to 125 billion, we may make a pump to current valuations of about 200 billion. Before we correct again to maybe like 150 or 170 billion, and then we set the higher high, and finally, and that's then 1 year and a half from here, we're back at 350 billion, where we were like half a year ago. If we have such prices, then indeed it's really pulling down the trend line that is already today at 400 billion, and goes up rapidly still, but really needs to start to slow down, because uh, we want to be only at 550 billion or maybe 600 billion in 3 years from here. But we're already at 400 billion today. It really needs to slow down quickly, and that's why I think it's still looking very bearish for crypto, and one should prepare for that. However, my allocations, yes, recommended allocations pretty much stay the same. Actually, before I change this, you change this to 55%. Like before, you will see, it recommended 48% allocation. Actually, it was 52%. There are some other small things that changed here. But that was my recommend. I know that was a lower. It was about 180 billion when we made the low. My recommendation was 52%, and that's based on different calculations of what's the right allocation with these kind of risk reward ratios, these kind of MRV ratios, these kind of what else? Kelly, and these kind of undervaluation compared to the trend line. It used to be like 52%, around 180 billion or so. But right now, because this changes to higher odds to go down, the recommended allocation at current valuations goes down a little bit too. But this is like small variations. I think it was still right to go to a majority allocation around 180 billion. You're still sitting on nice temporary gains that you could lock in, but that's not the way I invest. I think this bear market and early bull market is a time to stash coins, not to trade coins, try to sell for small profits, because there's always a small chance. And in this case, there's like a 34% chance, in my estimation, that we don't reach this, that we don't reach this point. That means that it could go up from here, or we could only go to say 5K and then up, and that means this target is never hit. I give that a 34% chance still. The big risk here also is that, and you may have noticed me too, is that testing the bottom, I used to have a lower, like typically as the market goes down, you always like think that the chances for it to continue to go down are the same. And sometimes you even would start to say, like, actually, it's higher now to go down, even though it's a lot lower. And that's a big trap to fall into, because the lower you go, the higher the chance that it will turn around and go up. And you see, if have been following my videos, that I've also been, well, guilty to that. This has also been the case with me. For example, the previous new high and undervaluation, actually, when it hadn't happened again yet, when it didn't happen yet, actually, I gave it only a 60% or a 66% chance to happen. But then later I raised it to 70. As we became closer to it, I raised it to 75%. I found it more probable to happen, and it did happen. And so it still stands at the latest estimation that I gave it, of 75% chance to happen. But this is dangerous. And typically what you will see when we reach this bottom, if we would test 4K, you will see that I will probably also start to increase the chance that we will make a new bottom. And that's the danger to fall into, the trap to fall into, because that's why you don't buy enough when the getting is good. So you have to be very careful to increase these odds as the price goes down, because that's actually not congruent with reality. That's how technical traders think, but I think that's really wrong. Like, the trend is your friend and all that is really the best way to be, like, miss the bottom and also to buy, and miss the top to sell. Because actually the trend is not your friend. The longer the trend lasts, the more likely it is that it will turn around. So voila, I hope it was valuable for you. Thanks so much for watching, and see you on the next video. Bye.